Morning, guys. This is the first time I've presented this story, so I expect a lot of you probably won't know it, but we're moving into developer status with our manganese deposit located in Western Australia. We've come from a history of being a diversified explorer over 10 years, and that's how we look today, with a balance sheet that comprises about 10 million in cash and listed investments, a market cap of about 23 million, and an EV giving about 13 million bucks. So we're at the small end of the scale, but we're looking to change that. Board of directors is a combination of Seamus Cornelius, who's a lawyer, myself as a geologist, and John Ribbons, who's an accountant. We've got a very experienced geologist in Dave O'Neill, who's ex-Western Areas and Western Mining, very strong technically, and a tight register with the top 20 holding about 67% of the shares. A lot of people, this will be new to a lot of people, but manganese is kind of not just the dirty black stuff that goes up to China to go into steel mills, but it's also has an important role in the high purity space, in batteries, fertilizers, animal nutrients, etc. It only makes up about 10% of the volume of the market, but it makes up about 40% of the value. So you get a big value lift when you move from the ore grade manganese industry to the high spec end, and that's what we're intending to do. It's a space that is forecast to grow strongly. Not just with the growth in steel production, because a lot of this goes into Series 200 stainless as well, but it's also looking to grow strongly because of the battery consumption in both the EMD and manganese sulfate spaces. Metal Bulletin's forecast is that the market will grow from about 5 billion today to about 10 billion over the next 10 years, so it's good to get into a market that is growing so strongly, and that's our clear intention. Just to clarify, I guess a lot of people, when I go to conferences, they talk about nickel as the flavour of the month at the moment. Cobalt's obviously popular, and lithium as well. This is a slide gratuitously stolen from the Nickel Institute website, which shows the nickel use in batteries, but I've just made a little bit of doctoring of my own, which shows that manganese actually is a key input to those batteries as well. So don't make any mistake, manganese is a battery metal, and it's part of my mission to get people to start talking about it that way. Our project is located in Western Australia. It's 100% owned. It's basically 500 kilometres south of Port Hedland, so it has easy access to logistics infrastructure. There's a bitumen road that goes straight through the middle of it, so that's pretty straightforward from that point of view. We're currently completing a scoping study into the production of high purity products from this resource, and that's expected to be released in the next week or so. That's the resource as it stands. It's massive. It's 180 million tonnes. Sits in the ground at about 10.8%. We've drilled out 20 million tonnes or so of that to the tune of about 12% in-ground grade. We spent a lot of years trying to beneficiate that to the grades that would compete with the traditional ore suppliers, which is sort of 35 to 40% manganese. We struggled to get it up above about 30%, 33%, and that's sort of made it difficult to get into that space. But we've since had a breakthrough technologically that has allowed us to contemplate the high purity space instead. That's the project from a bird's eye view. The blue outlines are 2 of the 7 resources that make up that 180 million tonnes. You can see the bitumen highway and the gas pipeline that goes straight through. It gives us cheap access to logistics and energy. Gas gives you about half the cost of energy over diesel in Western Australia, so that's a big plus. Geologically, the ore body is extremely simple. It starts at surface and goes down to about 40 metres at its maximum depth. Its strip ratio is about 0.2 to 1, so mining is not a constraining factor on this deposit. And because of the infrastructure and energy advantages that we have, we can pretty comfortably put ourselves, pretty low on the cost curve in terms of producing ore. The challenge here is not production of ore, it's converting that ore into high purity manganese. We had a bit of a eureka moment last year working with CSIRO, who came on board as partners to look at hydrometallurgical processing options for this resource. Traditionally, manganese ore goes to China and is either leached with sulfuric acid or it's calcined to reduce the manganese so that it can be dissolved with sulfuric acid. With CSIRO, we discovered that this ore body in particular, because of the unique mineralogy, dissolves at atmospheric pressure and ambient temperature without using sulfuric acid. So that's a massive leapfrog ahead on the cost curve compared to traditional producers of high purity manganese. And it means that we go from being potentially a high volume, low margin producer as an ore supplier to a low volume, high margin producer as a high purity manganese product producer. So that was kind of a pivotal moment for us. Just to give you an idea of the contrast with existing producers of high purity manganese, in particular manganese metal, the traditional route is to import ore from South Africa or West Africa. You then need to reduce that manganese using roast reduction by heating it to about 1,000 degrees Celsius, and then leach it with sulfuric acid. It's a high emission, high energy, high cost, and it's a technology that is due for disruption, in my opinion. Our work with CSIRO on our deposit means that we mine cheap ore at surface. We've got a very, very fast leach at ambient temperature and atmospheric pressure. It's an exothermic reaction, so we don't actually put energy into it at all. We don't need to use sulfuric acid, and with some pretty simple chemistry, we can purify that to produce either manganese metal, dioxide, or sulfate for lithium-ion batteries. So it's a low-emission, low-energy, disruptive technology that I think is gonna make waves in the coming years. So the scoping study that we're conducting at the moment is due for completion in about a week. It's going to look at a number of sensitivities on this deposit. Scale is a really interesting one because it's 180 million tonnes. It's almost infinitely scalable. We can take this from 50,000 tonnes per annum right up to potentially 1 million tonnes per annum and dominate the high purity manganese market. There'll be a sweet spot there for us, I think. I don't think it'll be at 1 million tonnes. It'll probably be something that gives us a capital hurdle that's manageable for a company of our size. We're taking a pretty close look at the power solution because the power input into production of manganese metal is a major input. We've got the gas pipeline, but we think we can even do better than that with renewable penetration, potentially up to 70%. So we're working with some people on that side of it as well. And we can drive that cost down to what we think is parity with our Chinese competitors. Logistics solution is pretty straightforward. It's a road transport situation with ports at Port Hedland to the north and Fremantle to the south. Mining is a non-issue for us because it's such simple geology, and it'll be very much a low cost item on the list. And then of course you've got to establish relationships with offtake partners. So that'll be steel producers, battery makers, fertilizer producers, etc. So that work has yet to be done. And obviously one of the key outputs of that study will be the CapEx, OpEx estimates, so that we can make some decisions on product selection and scale, as discussed before. So look, I think from an investment point of view, we've got an EV of $12 million. We've got a massive opportunity ahead of us to crack into a very lucrative part of the manganese business. I think it's a genuinely world-class resource. The unique mineralogy means that we can transform the way high-purity manganese products are produced. The technology breakthrough with the CSIRO has allowed us to see a pathway to really unlocking that value. And I think we're coming into a market segment that's forecasted very strong growth in the next decade, so that's a great time to come into it. And I think we've got a lot of competitive advantage over existing producers, which is going to give us a good launch pad for success. The strong balance sheet that we sit on with 10 million in cash and liquids will fund the PFS and DFS over the next 2 years. And then I think we'll be obviously looking at further financing to build the project. As far as I know, we're the only listed company that's in this space. 97% of high purity manganese production is in China. There's a few boutique producers around the world in Africa and the US and Spain. But certainly on the ASX, we're the only company that's doing it. And if you want exposure to this sector, we're the obvious choice. And I think the future's bright. To that end, we're going to change the name of the company to Element 25. This is subject to a shareholder meeting on the 4th of May. 25 is the atomic number of manganese, and it reflects the focus on manganese going forward. And we've got a number of other gold, nickel, cobalt assets that we'll look at spinning out or doing something else corporately with, so that we can focus our resources on the manganese story. And that's about it. But if there's any questions, we're at booth 45, and I'd be happy to take questions there. Thank you very much.